QuickBooks Online 2026 Reports Overview. What's the definition of a QuickBooks report? Why are there so many reports? What's the best way to visualize and categorize those reports? We will get into it. So get ready and some coffee because we're about to go on stage with QuickBooks Online 2026. Searching for the free QuickBooks Online sample company file as we do every time by simply typing into our favorite browser, QuickBooks Online Test Drive, looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. Then, of course, we got to verify that we're not a robot, Ara.
Not a robot. I still think pineapple belongs on pizza. Verified.
All right, so that'll do it. Pineapple on pizza, I don't know. I've never been a big fan of it myself. But let's go to the reports on the left-hand side. And we're going to be then opening up the major financial statement reports as we do every time, focusing this time on reports, noting as we do that the favorites always have the balance sheet and income statement in them. Why? Because those are the financial statement reports. They're kind of a level up from all other reports. If you're an accountant and one of your favorite reports is not the balance sheet and the income statement, otherwise known as the profit and loss, something's wrong with you because those are the foundational reports. So let's open them up as we do every time. This is why we open them up every time. Right-clicking on the balance sheet to open a new tab. Right-click the P&L, the profit and loss, to open it in a new tab. Let's tab to the right. We're going to close up any pop-ups, change the range, currently still in 2025, even though we are in 2026 because they haven't moved the data over at this time. 010125 tab, 123125 tab, going to the P to the L, the profit to the loss, doing the same thing. Going from 010125 tab, 123125 tab. All right, we've been doing this every time because remembering our objective as a bookkeeper or an accountant of any kind, typically that's working within a business building the books, would be if I go to this first tab, we're going to do the data input. So we're doing the data input. And as we do that, we're trying to keep the customers, vendors, and team in mind so that I can communicate with the people as easily as possible and make sure that I collect the money, get the revenue, pay off the vendors that I have to, communicate with the owner so that they are aware that we're getting paid and whatnot so that we can get paid if we're on the payroll. And as I do that, I'm communicating or want to make sure that I have my financials being built, particularly the profit and loss, so that this can be used to create at least the taxes for small businesses, possibly also for external reporting purposes as well. So this is one of our major objectives, the building of the financial statements. If you're in a textbook situation learning accounting, you're going to learn the whole thing with the idea that you're putting the journal entries in place to build the financial statements. So that means when we think about the reports, from a QuickBooks standpoint, we have a little bit difference of terminology once again than we would have like in a textbook. Meaning, if I go back to the reports over here, the main reports of the balance sheet and the income statement, we would basically call the financial statements. Those are the end result. Those are the main financial statements. You might include another report, that being the statement of cash flows, and a typical reports that are the financial statements. But even it is a little different because when you build the statement of cash flows, it's not the first thing that you build. You kind of build them from the balance sheet and the income statement. So as you actually do data input into the system, those transactions that are in the plus button will make journal entries being the double entry accounting system, which can be thought of in format of debits and credits, but if not, in format of the accounting equation, assets equal liabilities plus equity. You can think about a mid report, which would be the trial balance, that then is used, trial balance being debit and credit report, to build the financial statements, balance sheet, and income statement report. Okay, so once we have that idea in place, then what are all these other reports doing? Are they just, how do they relate to the financial statements, the main reports? Well, they're usually going to give more information about one or multiple line items of the financial statement report, and or they are simply adjusting the major financial statement reports, adding different time ranges. So we're going to get into that in more detail with all the reports, but if you keep that in mind, all these other reports are going to be a lot less kind of overwhelming. Okay, so that's going to be the general idea. So to show you what I mean, let me do a quick rundown of the format of the balance sheet and the income statement. We'll go into it more detail shortly, but if we just break down the components and then think of the other reports in relation to it, that might give us a better grasp of the reports and be a little bit less intimidated by them. So the balance sheet is the double entry accounting system. It is the accounting equation. We have assets, liabilities, and equity. So all other reports, if they're balance sheet type reports, which are as of a point in time, will give us more information, breaking out this information in some other way. So if I open up the balance sheet, the assets, we have the bank accounts, the accounts receivable, and then the other asset accounts, and then the fixed assets. Under the liabilities, let's just open the liabilities. We got the accounts payable, the credit cards, and then the other accounts payable, long-term liabilities, and equity. So those are going to be the line items for which the other reports might give us more information. On the income statement, that's our timing statement, our performance statement, typically ran for a month, a year, or a quarter. And for taxes, it'll typically be a year because that's when the IRS is going to be taxing us on basically a yearly basis. Mainly has just two parts, income and expense. Cost of goods sold being a special type of expense if we have inventory. All right. So keeping that in mind, let's just go through quickly these categories of reports and think how do these relate to the major financial statement reports? So they've grouped them business overview. So you would think these would be some kind of business reports. We have audit log. Okay, then the balance sheet. Now the balance sheet, that's the one that's up here. We have the star up here. That's always in the favorites. You could take it out of there, but pretty much it's always some kind of balance sheet will typically be a favorite. Now, this is a balance sheet comparison. All they did was take the balance sheet and customize it, which we could do ourselves. So that's just a variant on the balance sheet. A balance sheet detail, again, basically just a variant on the balance sheet, giving us a little bit more detail. Balance sheet summary, a variant on the balance sheet, giving us less detail, basically removing all of the triangles, right? So we just have the summaried account type headings, and we'll get into these in more detail later. I'm just giving you the overall idea so you can see how these are broken out. So the balance sheet summary, the statement of cash flows, that's the other major financial statement report, noting small businesses might not use it as much because they're really just focused on trying to collect their revenue and basically get their tax returns done at the end of the year. But if you're on an accrual-based system and things get complex, then the accrual in revenue recognition is different than the cash flow. So then the cash flow kind of gives you the best of both worlds, meaning you're on an accrual system, you have accrual accounts, accounts receivable, accounts payable, inventory, but you also can then switch over to a cash-based report so that you have the best of both worlds. Cash-based and accrual-based would be the idea. Then you got a business snapshot. You got the profit and loss. That's an income statement. That's the one that's starred. That's the one up here. That's the other major financial statement report. And then you have variance on the profit and loss by customer. So that's going to give you basically the revenue side of the profit and loss broken out by customer, which is once again you could derive from a standard profit and loss. We'll talk more about those ideas later. Profit and loss by month. Again, variant of the profit and loss. We can basically build that from a standard profit and loss. Typically, profit and loss tag group, they're actually removing tags, so that's not as useful. Profit and loss comparison, just basically comparing 1 year, 1 month, 1 quarter with another so that we can build those as we'll see in future presentations, but it's just a type of profit and loss. Profit and loss detail, type of profit and loss as a percentage of total income. Again, a type of profit and loss, which we could build ourselves. So they put these reports in there as custom reports, even though they are reports that we can build from a standard profit and loss, which we would like to do because that gives us more detail about exact customization rather than having to rely on their default reports. Profit and loss year-to-date comparison. Similarly, again, it's just a variant of the profit and loss that we can make ourselves. Profit and loss summary reports. Similar, that's a type of profit and loss. Who owes you money? What account do you think this is going to give us more information on typically? Who owes you money would be the accounts receivable. Now, so if you don't have accounts receivable, this whole section probably won't be there as much, meaning if you don't invoice customers, you might not be dealing with this whole section of reports. If you do, it might be very important. Accounts receivable aging, meaning give me the accounts receivable by customer and by the past due dates. Accounts receivable aging details, similar. Collections reports, it's going to be a similar thing because we're collecting on accounts receivable. Customer balance summary, again, similar thing. We're breaking out the customer subledger, not by date of transaction, but by customer. Customer balance details, similar. Invoice list, once again, the invoices are the things that make the accounts receivable. So similar thing, we're breaking out the accounts receivable. Invoices and received payments, those are both the increases and decreases. So give me the detail by customer of increases and decreases, invoices and receivables, the payments that have been received. Open invoices, those would be the accounts receivable, meaning the invoices that have not yet been paid. Statement balance, terms list, these are going to be kind of lists that are in the forms. Unbillable charges, meaning these are charges that we have made with like billable expenses, for example, or unbilled time that hasn't been billed out. Most likely we wouldn't be using that here so much as in the report center or in the customer center, looking for those unbilled time to bill out with invoices. Inventory, what obviously account would these be giving more information about? The balance sheet account, asset of inventory, right? So these are all going to give us more information about inventory. So inventory has the general ledger here by date. I also need the inventory by amount or unit using some kind of flow assumption, which would be the first in, first out, typically with QuickBooks Online. So we got the inventory valuation detail that breaks it out by detail, by amount and detail. Inventory valuation summary, similar. Open purchase order detail. Purchase order are the forms to request inventory. So we have to track that they have not been paid. Oftentimes we would do that internally in the vendor center over here. Open purchase order list, similar. Physical inventory worksheet, that will help us to count the physical inventory to verify and see if it matches what we have. What about the sales and customers? What accounts would that give us more information about? The profit and loss. Income statement would be the primary thing that comes into play. The income statement recorded by account, and then subledger or the general ledger drilling down transaction report by date. You might also want to see the income by customer or by vendor. That usually can be done with some of these reports. Sales by customer type details, so we can break out the sales by the type, giving us a subsidiary report. Estimate and progress invoicing summary. Progress inventory is kind of a specialized thing for particular types of job cost businesses that have long-term projects. Customer contact list. This is just a list of the customers, so we have their phone numbers and whatnot. It's in the sales and customers. That makes sense. Income by customer summary. So now we want the income not broken out by account type, but by customer. So we would only have that, by the way, if we properly use invoice and sales receipt forms, not deposit reforms, so that we have the customer information. Customer phone list, just giving the information for the customers. Sales by customer summary. Once again, we want the sales by broken out by customer. Sales by customer detail. Deposit detail. This sounds like a balance sheet account and basically is. However, it kind of relates to customers because you would expect most of the increases in cash are ultimately coming from customers. So estimates by customers. The estimate form is the form before you make a sale that you might use. Inventory valuation detail. Why do they put the inventory here? This is where they had it before they had that inventory category. So they haven't really taken the inventory out here. They have duplicate reports in here as well as in the inventory section. Similar with the inventory valuation summary. Product list. So that's a list of products, which again, they didn't really know where to put. I would think it might be better put in the inventory section because that's the list of products, which most likely you would be going to over here in the system. Sales by product. So now we're going to break out the income account, not by customer, but by what we sold. So it's on the profit and loss by account. Then I could break it out in a subsidiary ledger by the thing we sold, goods or services. Sales by product, service detail, similar. Payment method list. This is just a list of different payment methods like credit card, cash, and so on. Physical inventory worksheet. Again, that's a duplicate, which also is in the inventory section. Time activities by customer detail. Transaction list by customer. Transaction list tag group. Okay, they're going to get rid of the tags. So let's go down here. Next section, what you owe. So what would be the primary account that we would expect what you owe to be? I would prefer if I was them, I would actually put the primary account. This would be accounts payable, right? The balance sheet, the primary parent account is the liability account of accounts payable. Here, that goes up with a bill form that we enter into the system that we have not yet paid. It's an accrual form. Many small businesses don't really track accounts payable because they pay their bills as they become due, either with the checking account or with credit cards. So the reason they do that is because you can automate it with the bank feeds. But larger businesses are typically going to need accounts payable for the time value of money. So accounts payable aging summary, similar to the accounts receivable, you're going to break it out by past due and customer. Accounts payable aging detail, similar. Bills and applied payments, meaning give me the ups and downs. Bills increase accounts payable, payments decrease it. Bills payment list, that means we have the outstanding bills that haven't been paid, which is going to equal the accounts payable. 1099s. 1099s, they don't know where to put those really, because that's a tax thing. So it's got to go somewhere with the vendors. So it might more properly go down here. So they have a duplicate. Again, you got some 1099 stuff here, some 1099 stuff down here. Doesn't fit anywhere perfectly. And more likely, you're going to go to the center over here for sales tax to deal with the 1099 stuff in any case. 1099 contract balance summary, unpaid bills. Unpaid bills should add up to accounts payable, because bills increase accounts payable. If they're unpaid, then they haven't removed or been paid yet. Vendor balance summary, which is the most primary subsidiary ledger, basically just breaking out the balance detail by vendor. And most likely we will go internally over here to the vendor center to find that information. And then the vendor balance detail, similar. What about the expenses and vendors? What would we expect that to give us more detail about the major financials? Well, the expenses are on the income statement. So the expenses here, how can we get more information about expenses? Expenses are broken out by a category for what we use the expense for. Similar to the customers being broken out by category, the income could also be broken out by customer or by item. The expenses could also be broken out by vendor, right? Could be broken out by the people that sell us the stuff. So that's one report we might expect over here. So we have the check detail. That's weird. Check detail would be on the balance sheet for the balance sheet of cash. But it kind of makes sense because the check detail might be the way that we pay all of our expenses. So the other side of the transaction would be expenses. So 1099 transaction detail, again, we're going to have to deal with the 1099s. We'll talk more about that in future presentations. Typically, you're going to get to those reports in the sales center over here, the sales tax. Purchase by product sales detail. Now, when we purchase things, you'd say, well, that sounds like it's a asset account for inventory, and it is, but the expense of it would be cost of goods sold. So it kind of hits the income statement. So you don't know exactly where it is. They might have duplicated that in the inventory section. And then we've got the open purchase order detail. Once again, they put some of the inventory stuff down here. I believe that was also in the inventory section. So they had it here before they had the inventory section. So they didn't want to take it out in case people are used to that, I think is the idea. But now they moved it. Open purchase order, same thing. Purchase list, again, similar. Purchases would be dealing with inventory. Hasn't hit cost of goods sold yet, the income statement. And then the transaction list by vendor. So now you've got the transactions that have the vendor involved. Purchase by vendor detail. So now you've got your purchases by vendor. And then you've got your contact list, just listing out the vendors and the information to contact them. Expenses by vendor summary. This is the main one that I would be thinking of in this section, meaning you have your expenses that are broken out not by account, not by date necessarily, but by vendor, right? And then we have our phone list. What about the sales tax? The sales tax is going to be the balance sheet account of sales tax payable. This is a tax thing. Sales tax is not a federal income tax in the United States. It's a state and local tax, and it's a type of consumption tax. So we, the company, have to record the tax and then pay it to the government as we make sales with the forms of invoices and sales receipts. So they have over here liabilities, the sales tax payable. Where's the sales tax? Usually it's the Board of Equalization was the sales tax payable account, which I don't see right now for some reason, but that's the idea. There should be a liability account. This account then would give us the sales tax liability report, the taxable sales summary, taxable sales detail. Now, these reports, I believe, once you have your sales tax on, if you're doing sales tax through the system, will be generated in the sales tax center. So I think they're going to be, you're more likely just going to find everything housed in here. We'll see this in the second half of the course when we set up sales tax. But this might be somewhat obsolete because, again, you might not go here to be dealing with the sales tax, but they've had this here before. So they don't want to like remove it in case you're used to that. I think there's some duplicates in terms of where the reports are. And then employees, what accounts would this give you more information about? Well, remember that employees deals with payroll. If you have someone working for you, you can either hire them as a contractor or an employee, which in the United States you're required to. If you have a contractor, justify why they're not an employee. Make sure you do that, or the IRS might come after you. If they are an employee, you have the question of, should I run payroll through QuickBooks, which is an add-on and will also add a lot of complexity into the system, requiring us added information for reporting of pay stubs as well as quarterly reporting, year-end reporting, 941s, 940 W-2s, W-3s, or do I want it done by an external provider like an ADP or a Paychex, which actually keeps QuickBooks a lot cleaner because it doesn't have all of those other reports and all that other stuff for reporting purposes that's needed, but you still have to integrate the journal entry, which might be able to be done through bank feeds in part to get the transactions into the system. So if you have QuickBooks turned on in the system, add-on feature, and are dealing with payroll, there are multiple accounts that are going to be generated on the balance sheet. So meaning, let's just take a quick look at it over here. Like when you run the payroll, then what's going to happen is it's not just going to be a normal vendor, cash goes down, payroll expense goes up, but also we have withholdings. So that means so the other side on the liability is going to be payroll expenses, meaning the amount that you owe to the amount that you owe to the federal government, Social Security, Medicare, and federal income taxes, not yours as the business, but the employees, your portion of that, Federal Unemployment Tax Act, FUTA, as well as any state taxes, as well as any withholdings that are voluntary, such as healthcare, would all be liability accounts that would be reconciled to some reports over here. And then on the profit and loss, under the expense of, you would have payroll expense and then typically payroll taxes. So all of those accounts should be somewhat reconcilable to these reports. And these reports will also be the supporting reports for pay stubs that would be given to the customer, where you have to give them the gross earnings minus the withholdings per check, and also summary per year to date. And we'll give the backup information for the reports given to the government on the federal side, 941s, 940, W-2s, W-3s, and so on. Okay, so then what about for my accountant? What accounts would these be supporting? Now, if it says for my accountant, then normally you're thinking about accounts that have debits and credits in them. That's kind of where they put all the stuff that has debits and credits, because QuickBooks is trying to put all other reports where you don't need debits and credits for the most part up top, and then the ones that have debits and credits kind of down below. So that's kind of a default rule. Some of these are duplicated, and some of them are like more informational reports like the general ledger. So let's go over them quick. We've got the account list of accounts. We've got the recent automatic transaction list. So those that are automatic, and they've repeated the balance sheet. So they put the balance sheet down here again. It's already up top in the overview, so it's kind of not really necessary. Balance sheet comparison, that was already up top, I believe. So it's a summary report. Balance sheet detail, another type of balance sheet, which again is a duplicate because it was already up top. Balance sheet summary, same. Statement of cash flows, same. It was already up top in the overview. Invalid journal transactions. Now, we would expect a journal transactions report to be something that would be down here. I would, at least, right? Because that's going to show debits and credits. We have the general ledger. That's kind of like the transaction detail when you drill down on an account and get into the detail. Meaning it's going to be a report that's going to be giving you the date of the transaction and the running balance of the transaction. But this one's going to give it to you for all accounts, which used to be you really needed that before. But now you can give this information to your accountant by allowing them into your QuickBooks system, so they can just drill down just the way we did right there to the transaction detail. So it's not actually as important. Then the general ledger report list, we have the journal. This is a pretty cool, we'll talk about these reports later, but this report then is going to do the same thing as the general ledger in some ways, but it's going to give you the debits and credits, which is pretty cool because it gives you the debits and credits for each of the transaction that you make. So you can kind of learn debits and credits that way. Reoccurring template list, profit and loss. This is redundant because it's up top again. That's the other major financial statement reports. Variance on the profit and loss by tag, profit and loss comparison. Those were redundant. They're up top. Recent transaction reconciliation reports, the main one being the bank reconciliation. We'll talk about bank reconciliations in another course or section. It, you might think, is of course tied to the cash accounts, which it is, but it's also a reconciliation of the whole accounting system. So it's a really important internal control. That report's a little bit different than normal reports because it is an internal control report, meaning it's not just a report that's generated as we do data input. It's a report that we make after doing the data input as an internal control. We'll talk about that later. The trial balance from a normal accounting system, when you enter these journal entries, these forms, they make journal entries, debits and credits, that then is used to build a trial balance, which is kind of like the balance sheet on top of the income statement without any subtotals in the format of debits and credits. It's actually a lot cleaner. We'll look at the trial balance later, but then you take the trial balance, you use it to make the balance sheet and income statement, adding subtotals and putting it in the format of an accounting equation, assets equal liabilities plus equity, so that anybody can use it even though they don't know the more efficient debit and credit format. So then we have the adjusted trial balance, and so that's going to give you a trial balance where you can kind of put your adjusting entries. It's well, maybe we'll look at that. I mean, it would be nice if you could show the adjusting entries and show the but a lot of times they haven't got that exactly perfect yet, but maybe we'll take a look at that. Transaction detail, by account. So this is going to give you all of the transactions grouped by account. Transaction list by date. This is a pretty cool one because it's going to list all the transactions, not by account though, but by date. Transaction list with splits, giving you the more detail. And then again, you've got another payroll item down here. Payroll being reports, as we saw up top, that would be there if you have payroll on, running payroll through the system. All right, so the bottom line is this. The major financial statement reports are the balance sheet and the income statement. You build the balance sheet and income statement as you do the forms because they make transactions. You want to be able to tie these forms to the impact, which will be at least 2 accounts affected on the balance sheet and income statement, so that you have some idea of what's going on. All other reports shouldn't overwhelm you because once you understand that they're all just basically more detail about one or multiple line items of the major 2 financial statement reports, that should put them in perspective. And then you can use them accordingly and see which ones are appropriate. Also noting that there's a lot of bloat with these reports. There's more reports than there needs to be because, as we saw, there's duplicate reports in multiple sections. There's tax reports that you might be doing from some other location, and they have made multiple variants of the profit and loss and balance sheet, which you could make yourself if you know customization, which would be better to do and will show how to do in future presentation.